Welcome, everybody. Welcome to Liberty Call. Today is Tuesday, April 2nd, 2024. Hope you are having a fantastical day out there. It is a beautiful day here in Colorado. The sun's out. It's like 50 degrees. And I had to run some errands into town just a little while ago. Man, almost drove off the road. It's so picturesque here. There aren't words to describe how wonderful and beautiful it is out here. So anyways, hope you're having a good day. If you're in the Midwest, I know that they're getting some bad weather in the Ohio area. I don't think I know anyone in Ohio, but actually my daughter-in-law's family lives in the Cleveland area, but I don't know any of them. So hopefully they're okay. So anyways, if it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell, because you want to hear when I say something smart. It's only once or twice a week, but you don't want to miss it. All right? Okay. All righty, let's see how the markets did today. It was not a good day in the markets. Dow Jones was down 1%, 396 points, closed at 39,170. S&P 500 down 0.72%, closed at 5205. NASDAQ down 0.95%, closed at 16,240. The VIX up 7.03%, it's at 1461. Canada down 0.5%, Brazil up 0.44%, and Mexico down 0.11%. In Europe, Germany was down 1.09%, the UK down 0.22%, France down 0.92%, the Netherlands down 0.04%, Spain down 0.89%, Italy down 1.22%, Switzerland down 1.15%, and Portugal up 0.43%. So kind of the lone positive spot there in Western Europe. In, let's see, Russia, the two exchanges there were in the green. The MOEX was up 0.35%, the RTSI up 0.14%. And the Asian markets, the Nikkei was up 0.06%, Australia down 0.11%, New Zealand up 0.16%. In China, the Shanghai was down 0.08%, the Shenzhen Component down 0.62%, China A50 down 0.21%, DJ Shanghai down 0.25%, Hang Seng up 2.36%. That's weird. And the Taiwan weighted was closed. All right, so those are the markets for April 2nd. So everybody, I saw some articles and some headlines earlier that Loretta Mester, one of the Fed governors, basically said that absolutely under no circumstances is she voting for a rate cut in at the April-May meeting. So I don't know if that put everyone in a bad mood today, but I don't know. It's weird. All righty, let's move over to today's market recap and see what's going on there. Dow in bruising, nearly 400-point slump as Q2 wobbles continue. Yeah, we're 2 days into the quarter and everything's going to hell. On Tuesday, U.S. stocks experienced a significant decline, largely driven by notable losses in healthcare shares and a continued uptick in Treasury yields. Remarks from various Federal Reserve officials emphasizing the necessity of maintaining higher interest rates for an extended period added to the market's concern about potential rate hikes. Treasury yields extended their recent climb, fueled by stronger economic data and comments from Fed officials dampening expectations for imminent rate cuts. San Francisco Fed President Mary Daly and Cleveland Fed President Loretta Mester both highlighted the importance of maintaining higher rates, citing persistently elevated inflation levels. Consequently, the likelihood of a Fed rate cut in June, as indicated by the CME's FedWatch tool, decreased to around 62%. Market sentiment was further influenced by job openings data for February, which showed a slight increase but fell short of expectations. Attention now turns to the upcoming March payrolls report, with forecasts suggesting a moderation in job growth while maintaining hopes for a soft economic landing. They've been saying that for a while. I think it's going to be, but kind of like a long duck dong. Big clash, big clash. Ooh, I hurt my throat there. All right. Back to it. Where were we? Healthcare stocks, including Humana, United Health Group, and CVS, faced notable losses following the announcement of Medicare Advantage rates. The announcement that Medicare Advantage rates would see minimal increases in 2024, potentially impacting insurers' profit margins. I mean, come on. The insurers work in cahoots with the government just so that they keep their margins where they like them and keep the prices elevated for the rest of us who aren't on, the government dole. Tesla led the slump in the EV stocks after reporting disappointing first quarter delivery numbers, falling short of analyst estimates. This development prompted concerns about the company's future trajectory and weighed on the other EV stocks like Rivian Automotive, Neo Inc., and Nikola Corp. In other market news, Schlumberger announced its acquisition of oilfield equipment maker Champion X Corp. for $7.7 billion in an all-stock deal, boosting shares of the latter. Conversely, PVH Corp., owner of brands like Tommy Hilfiger and Calvin Klein, saw its stock plummet over 21% after providing lackluster full-year sales guidance amid challenging macroeconomic conditions, particularly in Europe. Yeah, I believe Europe's already in recession. I try to stay on top of everything around the world, but I think the metrics are showing that recession has already hit the European area. So not shocking that they're not buying clothes, or especially name brand clothes. I mean, we can go to whatever their equivalent of Walmart or Target is and get cheap stuff. Why not? Actually, look at me. I don't exactly dress fancy, so I dress like a hobo. Anyways, all right. Next up, article from Zero Hedge has to do with the JOLTs report. It's titled "JOLTed Snoozer: Job Openings Unchanged as Hiring and Quits Unexpectedly Rise." The data from the Bureau of Labor Statistics on job openings in February showed little change, with openings remaining virtually flat at 8.756 million compared to a downwardly revised 8.748 million in January, in line with expectations. The report highlighted fluctuations in various sectors, with job openings increasing in finance, insurance, state and local governments, excluding education, and arts, entertainment, and recreation, while decreasing in information and federal government roles. That's good to see that there's less federal government jobs. I mean, if we could get rid of all of them, that'd be great. I know there's some people out there who are like, Ray, you're a jerk. Why do you always, crap on the people who work for the federal government? Because they're parasites and they're stealing from me. That is why I say that. And most of the jobs they do are just, moving sand around. I worked for the federal government for 4 years. I know exactly. And my son has been in the Navy now for over 7. So I have a pretty good idea of what actually goes on. Notably, the BLS has often revised job openings lower in recent months, continuing a trend seen across economic indicators in the current administration. Despite the unchanged number of job openings, the February data indicated a decrease in the gap between job openings and unemployed workers, down to 2.298 million from the last month's 2.624 million. This ratio, indicating the availability of jobs relative to the number of unemployed individuals, approach pre-pandemic levels. One significant trend observed was the rising number of quits for the second consecutive month, reaching 3.484 million, a metric signaling worker confidence in finding better opportunities. Moreover, despite stagnant job openings, hires increased to 5.818 million, the highest since October of 23, suggesting continued activity in the labor market. However, it's essential to consider the limitations of the data, as a significant portion of the job openings is estimated due to declining survey response rates. Approximately 70% of the final job openings numbers is based on estimates. So it's mostly bullshit. Raising questions about the accuracy of reported figures. Oh my God, government reports BS figures? Who would have thought? Amid broader economic challenges, the stability in job openings provides a nuanced view of the labor market's dynamics, prompting scrutiny over the reliability of the government data and its implications for policymaking and public perception of the economy's health. Well, I personally think the economy's health is not good. The yield curve has been inverted for almost 2 years as of June. There just seems to be a malaise over everything. I mean, even just in my own interactions, in my anecdotal experiences in, the real world when I go to town. I just don't think things are good. So anyways, all right, next up, this has nothing to do with finance, but I feel it's some good information to share. It comes also from Zero Hedge. Facebook shared private DMs with Netflix for nearly a decade, according to a lawsuit. I like Facebook. I mean, I like the platform. I like the interface. It's probably my favorite of, all of them out there. And, it's just run by idiots, unfortunately. I mean, that robot that seems to run the company is, I like the guy who played him in the movie. Jesse Eisenberg did a great job. But unfortunately, the real life Mark Zuckerberg is a, leftist twit who, you just want to shove him into a cannon and shoot him out, across the country. So anyways, all right, diving into this. Meta, the parent company of Facebook faces allegations of allowing Netflix access to private user direct messages for nearly a decade. Glad I really don't use the DM function that much. As revealed in a recently unsealed lawsuit, the lawsuit filed by Maximilian Klein and Sarah Grabert claims that Netflix enjoyed privileged access to user data through special agreements with Facebook, including an inbox API agreement dating back to 2013. In exchange for access, Netflix reportedly paid over $100 million and provided Facebook with detailed reports on user interactions with their Netflix account or content. The lawsuit alleges that the collaboration between Meta and Netflix facilitated tailored content recommendations and enhanced ad targeting on Facebook's platform. The partnership, which reportedly stemmed from personal relationships between Mark Zuckerberg and Netflix co-founder Reed Hastings, he's a bad guy, you should really look into him, allowed Netflix to access Facebook's private messaging inboxes and Titan API, granting access to messaging app and non-app friends. This revelation comes amid heightened scrutiny over data privacy practices in the tech industry. Meta, along with other Silicon Valley giants, has faced significant fines for mishandling of user data. In 2022, Meta was fined 265 million euros by Ireland for a data leak affecting millions of users. Additionally, Meta agreed to a $725 million settlement related to the Cambridge Analytica scandal, where millions of users' data was improperly shared for political purposes. Color me shocked. I have no words. No words. The lawsuit sheds light on the intricate relationship between tech companies and the extent to which user data is leveraged for business purposes. It underscores ongoing concerns regarding data privacy and the need for greater transparency and accountability in the tech industry. I don't know if it needs more transparency. When I do business with someone, I expect that they're going to keep my information private. I mean, my clients expect that I'm not sharing their information around the world. And I would expect the same of Facebook. Again, I don't use the DM function other than, hey, what are you doing? Or what's going on? Or, hey, kids, or, sending private notes to the, my boys and their families, or asking for pictures of grandkids. I don't use those functions very much. I'm not much of a texter. I'm more of a talk to on the phone or face-to-face kind of a person, but I'm an old fart now. I'm 50. So, but it is. It's not good, and again, not really shocking that these West Coast leftists are in cahoots with each other. And do I blame Netflix for trying to get a leg up on the other streaming services so that they can enhance their advantage? Is it, deceitful to do it that way? Yes, that's the problem. If you're just going to be upfront and honest about it, I mean, it's like if I were to have a referral relationship with, I don't know, some libertarian, podcaster or someone that I really enjoy, I have to disclose, and they have to disclose that I'm compensating them for, referrals or anything like that. So, if you don't do that, you're a real dirtbag, and it's not real good. So anyways, enough about me. Alrighty. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope you guys all have a wonderful afternoon and evening, and I shall talk to you guys next time. Adios.